Let's look at the S&P 500.
Please.
You just mentioned it here. Look at the futures here. We have a 1-year chart. I think it's interesting. I drew the line. You see it in red. It's horizontal here. We're right up below that kind of 4,600 level where the S&P futures topped out almost 2 times in February, right? And we had that kind of retest of the January lows here. We've had this rip, okay? Again, now we're down about 5%. We're above the 200-day moving average. That chart looks to me like it's basically going to need a whole heck of a lot of really good fundamental inputs as we get into quarter end. We know that we're going to have Q1 earnings coming in the next few weeks. I just don't see that as a catalyst for moving stock valuations higher.
That's what you have to ask yourself, folks. What's the catalyst? Obviously, listen, we've seen I think the S&P is rallied, 350 handles or so off the low, maybe more than that. What's the catalyst now? The Bears had to prove themselves at the lows. They weren't able to. Now the Bulls have to prove themselves, and we'll see if they're able to. I don't think they are. That horizontal line is exactly right. To the penny, as Carter would say, we are touching it. But look at that 200-day moving average. We point this out all the time. Lower left to upper right, effectively a trend line. It is flattening out here, and I would suggest it's going to start to turn lower. And we're going to there's going to be this battleground around the 200-day. And I think inevitably we're going lower. I'll say it again. I think 4,000 is the first logical stop. 3,750 to me is still a number that's in my head. Now, Tom Lee obviously disagrees with that, and he might be right. Listen, that's been the right course of action over the last 13 years, is to buy any sell off. The market just sort of levitates higher. I just think given everything that's going on in the world right now, it's very hard to make that bullish argument.